Hi everyone, happy morning, and me and Dana are back again, continuing the saga of gold. I hope you had a wonderful Saturday evening, and we're here on Sunday morning as you recover and before you get back into your work week, and give you some food for thought about gold.
Yes.
So there are three segments in gold, right? One is you have to pull the gold out of the earth. That is companies which do that. Then there is another company which takes this gold and makes something useful for you. People like not you, maybe your girlfriend, your mother, your sister.
For me also, gold coin.
Okay, gold coin. They do that. Then the third is people who take that a step further and say, okay, I've got this gold. Instead of keeping it in a locker doing nothing, I'll go pledge it, take capital against this gold at a low interest rate because gold loans are the cheapest, and leverage it and do some other business with it and make profit. So these are the three branches which are there in gold.
Yes, sir.
In India, we'll find companies in the first two. And we won't find in
Gold
mining. We don't do in India. There's no big gold mining in India. Gold making is there, gold selling is there, and gold lending is there. These three branches are there. In India, gold making are all your jewelers. These jewelers are like your Titan, Kalyan jewelers, right? And your Thangamai jewelers. These guys buy the gold, right? These gold which we buy in India are all imported. So they buy the gold, comes into India, gold dealers bring it to India. And these companies, either they buy it outside India, they're bringing it in, or they're buying it locally also, depending on the level of business they are in, right? Which segment of tire gold jewelry they're doing. If you're the smallest guy, you locally buy from wholesaler in India and you make. If you're on if you're on the level of Titan, you do not buy in local level, you will be bringing in yourself, paying duty and bringing it in. So it depends on which segment. These are the guys who are making it. These guys, how gold affects them is, if gold price goes up, right, that means the jewelry becomes more expensive. That means customers coming inside and buying will also drop. Because gold jewelry becomes expensive, people will buy it less. So it affects them inversely. Meaning gold gets cheaper, it's better for them because that means their business will go up. That is why we spoke in another video where they're trying to hallmark 9 karat gold.
Correct, sir.
Because people like you who are finding it hard to touch this gold because 24 karat, 18 karat is becoming very expensive. So government is saying, okay, Baba, we'll hallmark even 9 karat. So people like you can also have access to enter gold. So this is where how gold affects these guys.
Yes, sir.
Correct. Second is gold selling, which follows under the same guy. So what marks slightly different from this is there are companies in the middle where they do not make the jewelry. Where the guys make the jewelry, they buy it, they hold it, and they sell it. Right? So they are the intermediaries between
like
this and
this. And this.
Yeah. Okay, these are the sellers. We usually don't touch this. The main companies we look at are making and selling.
Okay, sir.
They are more profitable. These guys are very small.
Gold lending, sir.
Gold lending are the Manappurams and the Muthoot Finance. And these companies, price moves with their share price. That means gold prices go up. These companies usually, their prices also go up. Right? Historically speaking. Recent trend is different. And I'll explain why recent trend is different. Before we talk about why recent trend is different, why gold price goes up, their cost goes up is because they're lending against gold. So their asset itself is growing. So someone comes and gives 100 grams of gold and borrowed it at 100 rupees, right? Gold price has gone up. So the 100 grams of gold he's holding, his loan has become cheaper, right? That means there's underlying asset. For 100 grams worth of gold, he was giving 100 rupees. Now this gold has become worth more money. So the cost he's lent it to, his risk has become less. If this guy defaults his loan, his profit is even more. You understood?
Yes, sir.
So that's where the truth lies. That's why companies which lend against gold, they tend to go up also when gold prices go up. Now the question comes is, why is Manappuram, which is a gold lending company, not doing as well as it was doing before? Gold price is going up. But why is Manappuram going down? That's because Manappuram is pivoting.
Pivoting means?
Moving away. Okay, they don't want to just do gold lending business. They're saying we want to do more than that. We want to do other businesses. We want to, move away just from doing gold, and they want to dilute the reliance on gold loans. Because they're facing stiff competition in the gold lending business. Before it was only them and Muthoot who was there. Now every Tom, Dick and Harry, NBFC, everybody who's coming, they're all doing gold. So they're facing a lot of competition. So best way to deal with competition is you diversify your portfolio.
That's simple.
Correct. So that is the reason why Manappuram is correcting. One of the reasons. And of course, if you see, they're in the process of, they've got a microfinance company inside them, which is growing and growing, which Anand has been talking about, which is going to be floated as a separate company, right? So there's valuations happening and all that. So all that till it settles down, until that IPO of that one is separated from this. Yeah, Ashirwad is removed from this. This fluctuation you're going to see happening. Is Manappuram safe Yes.
Yes.
Is it a good? Yes.
Yes.
Yeah. But you have to have faith in it, and you have to have your goals and everything, and set price accordingly, and buy accordingly, and invest accordingly. Okay. So these are the ways to look at gold.
Yeah, sir. If we are looking for the Titan and the Kalyan jewelers like that stuff, sir, so it was relatively more expensive.
Yes. It's become very expensive. There's a time when Anand was talking about Tangamai. It was very affordable to consider. But that has bolted. That horse has left the building. It's become, as you call, diamond needle. Titan is a diamond needle. Kalyan is a diamond needle. There is a segment of your Gen Z generation which keeps saying, sir, yes, Titan is a diamond needle. But it will always be a diamond needle. So if I buy it at even 3,000, in 10 years' time, it will be 9,000, 10,000.
If the EPS has been growing away, then PS will be corrected.
Yes.
So we are looking for
Yes,
by that
but there's no guarantee of that. Because markets don't work like ITC, for example, which you like so much. There was a time when ITC, which was a 30 PE, was at 15, 16, and it stayed there for a couple of years. So there is a chance. Titan, with 3,000 you're seeing, everything is fabulous. Market can just be irrational and just drop Titan, like how it dropped Tata Motors.
Yeah.
There's no reason to drop it. Okay, if you're looking at long term, everything is great about
Everything's
it.
great.
Right? And the assets under Tata is immense. And it's owned by Tata and Sons. So everything is great about it. But the market felt differently. And it's keeping it suppressed. While it's overvaluing someone like Maruti. Right? The same FIIs who are buying Maruti can buy Honda and Suzuki in Japan. But they're not touching that. Which is undervalued there. So if you see the logic, it makes no sense.
Okay.
Because we are looking through this lens of value investing.
Correct, sir.
So that's why I'm saying, yes, you can buy Titan. And it might correct. Market might not think Titan's favorable and may stay there for a few years. Would you be able to sit through it? That's difficult. Yeah. Because imagine your 3 lakhs which you put in Titan has suddenly become 1 lakh. And it stays there for a few years. It is very hard to see it there. And like Anand always said, coming down is 50%. But to go back that 50%, it has to grow by 100%.
To catch up that.
To catch that up. You have to be strong enough mentally and believe in the business fundamentally to say it is okay. I'm happy with the dividends they're giving me. I'm happy. I don't mind. That I do not know. Because not everybody enters the stock market or goes to the gym just to, become like Rock Dwayne Johnson. Some of us just go to the gym to be a little fit. Because the doctor recommended this. So some of us invest because some auditor told us, or mummy, daddy saying, save some money, so we're investing. And if we see that loss in capital, we cannot have the stomach to carry it. Correct. Right. So that is why I say, we need to look at Titan and Kalyan Jewellers and all this.
Also.
Yeah. So keep it on your paper. When markets, yes, for some strange reason, some stupid thing like Israel is doing, something happens, sets off a global shockwave, you will suddenly see everybody pulling money out of the market. At that time, you can sweetly walk in and say, okay, I know this company and it's going very cheap. And you can pick it up.
Yeah, sir.
Right?
If we are considering as a Muthoot or Manappuram is comparatively cheap.
Comparatively cheap. And it has that microfinance company inside that. So you're buying 2 companies. For the price of one, you're getting 2
companies. And last one, sir. Rajesh Exports is a one share that I have been seen, but its PE ratio around 220, sir.
There are lots of companies like that, man. There's many companies, if you just look at PE ratio, it will be somewhere through the roof.
Just today I typed in keyboard, top 5 best stocks in 2024 gold. These 5 companies will be in the list.
So I fundamentally don't see value in it. It might be a great company and everything. I am not doubting that. But as a value investor, the way we're looking at it is nowhere in my radar.
Simple one is PE ratio 220.
Yeah.
That's it.
Yeah. So you can't even look at it. Everything else might be great about it. I'm not denying it. But at the current valuations, there's no point even looking at it. It's just something out of curiosity, intellectual curiosity, to discuss, to make one video. You can take it apart and say, But
good.
Yeah, but is it adding value to our viewers and you looking and analyzing it? No.
Yeah, sir.
Okay. Anyway, this is good. So thanks guys for watching this video on Sunday. I hope it kind of got you some insight on how to look at gold and how to look at gold companies when it comes to investing, especially through the lens of value investing. And like I said previously, do not worry too much and spend too much time about the Fed rates and dollar rates and the movement of all these things. Keep looking for value as always. And if you find value, then do take that into consideration in different coffee levels and keep doing that. And if you keep doing that, don't worry. In no matter of time, that is. Maybe it will take years, a few years, that is. You will get there. You will be somewhere where you're so comfortable you don't really think about it and worry about it anymore. It is always the initial part of the graph which is difficult to wait. In any log graph where you're just hovering, holding the border, but there is a deviation which you can't see. After some time, once it starts sticking upwards, and that after you reach your first 1 lakh and it becomes 10 lakhs and 1 crore, trust me, this will all be in the rearview mirror and you'll be looking in this fondly at these moments of anxiety. Anyway, thanks for watching. Do like and share this video. Do follow Dana on Instagram and ask your questions there, and we'll try and get them answered over here. Thank you for watching the podcast today.
Thank you, guys.
Bye.